Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So Fall Smooth Monday brought BTC down into the dumps to those liquidity pools that we pointed out on the charts. Just for reiteration of where we left off, we talked about these potential pools down below at the 0.65 at 27,364 and possibly at the 786 at 27,199. And we didn't get as far as the 706 trapdoor before reversing back into the vector candle here. What do I mean by all of this, and what was this 236 entry model that we gave? We'll get into that in a minute. We're a bit jumping the gun here, so let's go into high block capital. What is high block? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker, and we get to see where those crispy characters lie in wait because they don't use a stop loss. So let's go ahead and see where they lie in wait now. So what was this little arrow that we have here at 27,369? Well, that was this guy here. This 100x pool of 108 $1 million 100xers that they came back to and said gobbledygook, and they gobbled up all those 50xers.
Fatality.
And that's what happens without the stop loss and the hopium dream for 30k. And they came down and not gobbled them up. They spawned some divergence and started to pivot back into these 100x longs. 109 million at 27,641, and they started to gobble these guys up and fatigue, and now we go sideways with the continuation idea to the upside. Perhaps there is a $109 million 50x pool waiting up there at 27,920. Let's go ahead and adjust this. Now we can even just move it up there. Now that he was 27,920 would put you up in this region just about. So let's go ahead and delete this and delete the other one. We'll start fresh and start to look at how things unfold as we expand our vision to the higher time frame. Shout out to everyone here on the live. Boom, boom, boom. All right, so let's switch to external liquidity, the max liquidity here. And the external liquidity of the 7-day still suggests that we come sub 27K to get this 10 plus billion pool on the 7-day. That would come clear this 786 region of this trend-based fib to the downside. If we also look at the monthly time frame insinuates that we go lower as well. 25 below 26K has double-digit pools, and you have some double-digit pool at 26.9 to come back to. So at the bare minimum, coming back to sub 27K seems like the idea here after retracing into the vector here. And if we go to the 3-month, 3-month could be coming down into this 23.6 eventually, as the imbalance suggests that we could on the 6-month time frame. Sorry, 3-month time frame. The 6-month also, we have some $42 billion up at 28.8 and 37 billion at 29.1. So we have nearly 100 billion that they could come up for one more hit to the high. However, you're starting to get those 400 billion dollars down below at 24.3. Now starting to get 144 up at 32.1. So you're starting to get this kind of even Steven path up to 32.1 here. So I'd be weary where they're going as they reach this midway point. Surprising that they left the longs on the table here at the 2-year time frame. We have $261 billion down at 23.6. However, you have this 600 billion all the way up to 33.2. Just putting it out there, but it's starting to thicken those pools up to the upside quite thick. So did they leave this as an unscathed zone, similar to what they did back here, where they left this zone unscathed as a protected position range for the 15K region, and let that 197 billion slide as they went to the upside there? Are they going to do much of the same here on the 23.6 region? Who knows? Let's go ahead and everything's novel. History rhymes. It doesn't need to repeat, but it rhymes. So maybe they leave that protected position alone. But do they come back to this 25 region first? There's an awful amount of long positions here open beneath this sweeping low range at 25.7 and below. Let's leave the monthly open here and just see what we can see with the momentum involved, and then we'll bid you adieu. Try to make this as quick as possible, as deep and as quick as humanly possible. So one thing to note on this, what is this thing? Well, the heads up display is now on. This is momentummaster.info. Link in the description for more. You can check out the features, toggle it at Bitcoin's bottom, read about the trend cloud and the other components as they come into prominence. The prominence component that we're looking at here on the daily, was it the daily or was it the 12-hour? I think it was the 12-hour. So the 12-hour cloud got a little bit of a boost here. So this angle is not coming to fruition. It could be meandering up here at 2 o'clock still, getting a bounce off of the weighted moving average, which is the 706 region. And if we go to the 6-hour cloud, the 6-hour cloud starting to thin in a manner, and the cloud is starting to taper in an angle here. So is this a bearish retest of that to continue lower? As of this moment in time, we can use the trend-based fibs yet again on a smaller scale and use this confluence to see how it lines up with the 1382 at 26,544, once again pointing at this vector candle. Just giving it a gander, this point to look at, the 236 point would be at 27,538. So can you get below this 27,538 region on the 6-hour time frame? Let's go ahead and take a look at the momentum as we make our descent through the time frames. I believe the 3-day is now starting to close in another hour here. We were talking about this potential of the ABC to the downside, ABC with this rejection at the cloud, which we've seen 3, 6, 9 days coming as we hit this cloud 3 times, last time being at the 786 region of the impulse. And are we getting beneath this 236 for a short entry down to the pools below? If we look at the 3-day time frame, you're starting to get the KD lines to cross here, suggesting that the fatigue of the overbought levels of the probability. Stochastic RSI here, and the stochastic RSI also possibly crossing down here on the daily. Well, not, it is crossing down, and you're getting the cross down events of the baselines potentially. Definitely will close in an hour with this as a cross down event. Does it mean you drop immediately or create a double top scenario? It's possible, but every time you have this cross up or cross down, it is noteworthy of some movement in that direction. The last cross up on Saturday, August 26th, had you at hello for an upside play. So do you have a similar thing inbound for this downside play on the daily time frame, starting to get that cross down event on the baselines? As we come to the 22-hour, you're starting to get that vector candle on the 22, suggesting that that was a lot of volume as we dumped down beneath the 236 model we were talking about. Getting the cross down event suppressing the price on the 22. And if we head towards that 12-hour time frame, the 12-hour cross down has been in effect since Thursday, and we've been seeing that extended M pattern with that slow trickle suppression of the baselines here. So as long as you don't have candles closing above the baselines, the baseline cross down event is still in effect for the 12-hour as well. So now you got the 22, the 12, the daily, the 12, and if we make our descent through the time frames, I believe the 8-hour is also crossed down from back here, price steadily suppressing, and 6-hour. 6-hour getting to an oversold region at some point. Perhaps you reach down and reach an oversold bounce level at one of these fib levels at the sweep of the lows. We're just going to delete this Fibonacci just so we can have less stuff on our charts. And if we look at the 4-hour here, 4-hour attempting to make a move as the KD lines cross up and the money flow and the RSI stay the same. However, the Williams is suggesting that you have more suppression of this takeoff of the 4-hour and you go sideways and or suppress as this resets completely. This middle range and the opening way these averages are open suggests you get a hard reset on the 4-hour time frame. And this leads us to the hourly. The hourly battering its head up against the cloud. We saw this happen on a 1-minute chart on NASDAQ, and we took a short on this. So this battering its head up against the cloud. The cloud is mighty thick here on the hourly. I would suggest that we do not get above the cloud, or we have one last surge above it and then start to make our way down, as you would most likely create some bearish divergence in that process. The money flow coming beneath the RSI here is suggestive of a money flow play to the upside though. So we do have the baselines crossing up and the price action holding, so don't discount anything. Let's just go ahead and take a look at the medium time frame of the 15, because every narrative starts on the micro and builds its way up. Alright, so the 15-minute resetting in a manner here while the hourly is overbought. You are reclaiming the cloud, so I would look for this potential to reclaim and kiss the cloud to come up. If you are going to be in a short, or you already are in a short, this is where you would monitor and suggest possibly switching positions. There are some pools once again up in this region. So as it stands, we could come down to this pool. What is this? Did we already hit that? I think it was. It was just the... Okay, so looking for this reclamation of the cloud, not really seeing the volume step up to the plate. However, it is thin, so coming back to it is not out of the question. If we go to the previous times like this, for example, back here, if we go to a 15-minute chart here, you'll see something similar. There was this thinning of the cloud, and then we retested it, and we put out the projection of this idea of coming above the cloud and then coming back and retesting it, and then you were gone. We don't know how far it's going to go at that point, but all you can look at is that line in the sand. Does the cloud hold? Do candles close above it? It all starts from some time frame, and the 15 could be the one to take you there. Can't be too one-sided in the way we look at things, so let's put that bullish narrative out there just to be sure. So you have this Fibonacci zone here, so there are people looking for longs, just to be clear. You got an equilibrium down at the cloud at 27.5, so 27.5 is kind of your line in the sand. If you look at a deep retrace, you could get one of those as well, as long as you have candles closing above this region. So as of this immediate moment in time, you have the cross down event of the baselines here on the 15, and that is cascading most likely to the hourly as it bangs its head up against this cloud. The cloud angle is slightly changing direction, but not abating in thickness just yet. So we previously came back and reclaimed the vector candle, and we're looking to possibly continue up into the pools that we talked about on the 1 minute, most notably up here at that $109 million pool of 50x up here at 27,920. So could we get that push up to this region, or are we going to fade and head and subside lower down into the pools below? Can't be with you all day, so we'll just put out the levels for where you could possibly reject. These are the rejection zones. We talked about the equilibrium here at the 0.5. which would also coincide with the cloud. If it is bullish, it will bounce off of that perhaps. You could even get a golden pocket bounce off of this, or a deep bounce. As of this moment in time, hi. What's up? As of this moment in time, you're rejecting off of the golden pocket region, 0.66 rejection, and starting to come down lower. So we already talked about both projections here. I would expect into the higher time frame, you have those cross down events on the daily and whatnot to look out for. So possible suppression of that 1 hour. The more likely play here, as the cloud is thick to the downside. So looking at that cloud will be the way to think as we head to those pools. Once again, you have very sparse 100xers here, so coming back into some of the 50x here at 27,814 or 27,920, coming back into this one more time, creating an M pattern perhaps and fading off of that liquidity. So give the 15-minute its due diligence after it comes down a little bit with the hourly suppression to the cloud. See how the reaction at the cloud here is going to hold or not. Let's go ahead and take a look at USDT dominance. The USDT dominance we said would go up and likely kick people out, which it did. Now we're holding steady over bot, possibly coming back to put more back into the trades. That would insinuate an upside move. The Bitcoin dominance came up to a point here, now starting to get nukes on the dominance, so the dominance should drop off at some point. If the USDT dominance drops and the Bitcoin dominance is meant to drop, does that mean that Bitcoin will let the alts, if the alts get, people will have an alt rally as it goes sideways perhaps and holds this range as it consolidates? Total market cap has dropped, total 3 has dropped, everything getting oversold here in a manner. If we look at cryptobubbles.net, everything's red across the board. Alts are paralyzed by BTC's drop. So if the dominance drops and everything, people go into stable. So not as easy as yesterday in terms of looking for this 236 rejection. We got the rejection, so now do we see the continuation of that B wave to the downside, or is it going to be a fake out reversal scenario? Look for that reaction at the cloud at, once again, at 27.5. That also happens to be the bearish trend-based fib level, not by coincidence. Watch this. So it's going to be that fib level as well, 0.7577. So do we get rejected off of that or not? Not as clear as it was yesterday, once again, but that's my story and I'm sticking to it. More likely than not, you get a downside play based off the liquidity imbalances and the continuation idea. Where do you reject? Do you come up for a second hit and reject and create an M pattern and come down here? That is the question. And that's my story and I'm sticking to it, folks. So thank you for coming on into live and sharing your essence with me in this eternal moment of which we all share, an inextricable and inexorable part. Thank you for doing your part, for coming on in, and we'll do the same, bringing